Good morning, I'm John Delano. Welcome to the Sunday Business Page. This morning, how will the financial markets react to last Tuesday's election? We'll ask financial advisor Rick Applegate. Then the final stages of the Amazon HQ2 headquarters contest. Where will Pittsburgh stand after the decision? John Boyd from the Boyd Company, a Princeton, New Jersey firm that specializes in site selection advice, shares his thoughts with us. And then we'll preview next Friday's Light Up Night with Jeremy Waldrop from the Pittsburgh Downtown Partnership. It's all next right here on the Sunday Business Page.
This is the Sunday Business Page on KDKA TV.
And a very good morning to you. Thanks for spending part of your Sunday morning with us. Last Tuesday's midterm election was a mixed bag for Republicans, Democrats, and President Donald Trump. The GOP added to its margin in control of the United States Senate, but the Democratic Party took control of the U.S. House of Representatives. So does that mean more political gridlock or compromise? How are the financial markets reacting to the election results? We welcome back financial advisor Rick Applegate from R. Applegate & Associates, who is also a contributor to News Radio 1020, KDKA's Morning News. And the guy I always turn to when I want to know exactly what it all means. So we had sort of a mixed result in the elections,
Yes.
And the day after, the market went up 500 points.
Uncertainty was resolved, and that's what one thing Wall Street was looking for, is to know what will be the outcome. So we had a lot of uncertainty before. It started to resolve that day of the election itself. Next day, Dow goes up 545 points. Big day for the markets, 2% plus. Why? Because Washington is now in gridlock, and Wall Street loves that. They love it when no one party can move the agenda forward on their own.
I mean, it just seems so counterintuitive that the market likes gridlock.
Well,
they just don't, they worry that one side or the other might get what they want?
Absolutely, John. What happens is that now the Republicans in control of Congress and the White House can pass through more taxes, which will ultimately add only more to the deficit. So that's a side. But on the other hand, controlling the Senate, you can't get the tax reform that has been passed eliminated. So you have everything that Wall Street wants right now, which is a very favorable tax environment, a very healthy economy indeed. You know, the unemployment rate is low as it is, 40-year low. Wages are looking pretty strong. Consumer confidence is high. Everything looks happy. Let's keep it that way and not rock the boat.
Well, Rick, if that's true, why did my 401k take such a hit in the month of October?
Well, I think a couple of things. I think, first of all, the leadership of technology and the momentum stocks was well overextended. You know, when you look even before the October sell-off into September, there was over 200 stocks of the S&P which were in negative and or corrective territory at that point. 25% of the year-to-date return in the S&P came from two companies, Amazon and Apple. So it was very heavily overweighted toward the technology. That said, I think that what we're now going to see with this new dynamic in Congress and a president who has to be more conciliatory toward the Democrats, I think you're going to go ahead, John, with compromise.
Well, let me just ask you, just not to get too personal here, but I know if it's affecting me, it's affecting thousands, indeed millions of others who have investments in their 401ks, their company programs. I believe there was a day in October when all the gains we had made in 2018 were wiped out.
That's about right.
Are we going to make those back by the end of 2018?
That's hard to say, but I'll tell you this to give you some sense of comfort. And I'll put it this way.
I want comfort,
You want
please.
some comfort? 10% corrections, and this was not, by the way, a 10% correction for the Dow and S&P. It was for the NASDAQ, but not for the S&P and Dow. 10% corrections in the course of a year are normal, and people have to get used to that after 9 years of not having normalized trading environment. So a correction is always normal. Second point, from October 31st, after the Halloween period, called the Halloween indicator, or sell in May, go away, that next 6-month period, John, which has just begun November 1st until the end of April, is the best 6-month trading period historically in the stock market.
Really?
Yes.
So the market's going to go up in that 6-month period?
And it's going to be added to by the fact there has never, he repeats, been a midterm election period 1 year afterward where the stock market went down, always up. And it always goes up even more when you get the bifurcation that just happened in Congress.
Gridlock.
Gridlock is good.
So if we have you back here on April 1st or April 30th, I guess 6 months from now, the market's going to be back up and everybody's
going to
be
happy. Or I won't be on, will I?
Oh, no, we'd never do that to you. So let me just ask you finally, Rick, in terms of the economy as a whole, anything worry you as you look forward?
I think the things now that we've resolved the election that are still on the table is the Federal Reserve's intent to continue to raise its interest rates through its monetary policy and the trade tariff issues that we're still engaging with China. Right. So I think that the things given, I think what's going to happen, John, and you know better than anybody as a political analyst, is that we have a 2020 election, which is not too far away.
Oh, no, it's already started.
It has started. And I think you're going to see a different temperament of Mr. Trump toward the Democrats. And that, I believe, is going to begin to be seen perhaps toward the end of this month when the G20 meetings get together and he meets with President Xi Jinping from China. And I think there's going to be a lot of discussion about the tariff issues, which will be appealing to the Democrats. I also think there's going to be a lot of discussion going forth about infrastructure spending. I think two things that Mr. Trump and the Democrats agree on, and that is high drug prices have to be curtailed, right, and infrastructure spending has to happen. So looking forward, I'm not so optimistic about the drug stock situation, but I'm optimistic about industrial companies.
So the market will like an infrastructure spending bill?
Yes, I think so. I think if they can resolve how to pay for it, but I do think that, in fact, we need that in this country, and I think the market would support it.
Yeah, I think there's very good chance of an infrastructure compromise in sometime early in 2019. We'll see. Agreed. It's probably the one area that the president and the Democrats can agree on.
Exactly, correct.
Well, Rick Applegate, it's always great to have you. Just for the news that our 401ks are going to go up over the next 6 months.
But I'm not back in April 30th.
Oh, we'll get you back. We'll get you back. Thank you, good man. Really
My
appreciate
pleasure.
it. When the Sunday Business Page continues, the final laps in the Amazon HQ2 contest. How will Pittsburgh fare after the announcement? We'll hear the thoughts of Princeton, New Jersey site selection expert John Boyd from the Boyd Company. Stick with us.
The Sunday Business Page will be back in just a moment.